Welcome to Saving the Investor with certified financial planner, investment advisor, and insurance professional Alfie Townsend, president of Advantage Retirement Group.
Good morning, Southwest Florida. You're listening to Saving the Investor radio show. I'm Alfie Townsend, Southwest Florida certified financial planner professional. We are here. We have a special guest. And of course, I'm here with Pastor John Antonucci and Kyle Lee. Yes, don't forget the Dash. You know that guy. He's on TV all the time with his cars. And he knows a lot about cars and a lot about the economy, so we're going to ask him lots of questions. So stay tuned and enjoy the show. Good morning, John.
Yeah, good morning. Good morning, Southwest Florida. You know, today's topic, we're going to be navigating the post-stimulus economy, and we're going to start our show with Alfie's weekly market update, and you'll know exactly what's happening on Wall Street, even on Main Street, and how it can impact your portfolio. And as Alfie said, we'll be joined by Kyle Lee, founder of Lee Auto Group, to discuss how recent tariffs are affecting the auto industry and what that really means for you as an investor. But before we dive into that, if you're looking for more insights on retirement planning, tax strategies, or how to preserve your wealth, you don't want to miss Alfie's brand new book, Making Waves in Retirement. It's available for you today. You can pick up your complimentary copy simply by calling the operator and asking for it, or text the word book to 239-747-1077. Again, just call the operator, ask for Alfie's book, or text the word book to 239-747-1077, and we'll make sure you'll receive that within the next week or so. And Alfie, the market is volatile since Trump has got in. A lot of good things happening, but got a little bumps in the road, and I'm sure you can explain to our listeners what is actually going on.
Yeah, you know what I said, I was at a workshop this past week, and I started it by saying if Kamala Harris would have won, I said that the markets probably would have been better at this time. And then I said, because of all the money being spent and put into the market, and that is not a good, that's a recipe for disaster. What Trump is doing is he's curving spending. With that Doge, he's going in government buildings and government agencies and really going through and getting rid of the waste in there. And in the long run, and his tariffs in the long run, the market's going to be taking off. Big time.
Well, it's interesting to note that, in 60 days, I mean, it's shocking that prices are coming down, inflation's coming down.
Yeah.
The border's secure. He is making all those cuts, and, the volatility is there, like you said, because the markets are a little jittery on what these tariffs are going to do. And I know we're going to talk to Kyle Lee in the future, but what do you think the impact of these tariffs as we go into, matching percentages with other countries?
That's going to bring a lot of money to us, right? Because if they're charging us 200% and we're charging them 25%, if they go back to 25, or we go up, that's going to bring money to us, and that's going to overall it's going to be a good deal. But right now, everybody remember, and I tell people, if you haven't read the book, Kyle, I don't know if you read the book, The Art of the Deal. It was written in 1989. It's one of the best books written about negotiating, and that was Donald Trump's #1 bestseller back in it was like 89, 88. I read that book, and it really is a book to if you want to be a great negotiator, or if you want to see how the master negotiates, and that's what he's doing. He did it with Ukraine when Zelensky was in town a couple weeks ago, and he said he really said leave the White House, and Hannity was talking that from his inside information, he has it. He was saying that he was begging not to leave, and he made him leave. He kept insisting, I can, please let me come back. And he said, no, leave. And he made him leave. And then, the deal probably got better for us in those 10 days. And now he's going to be back signing that deal. So we just got to give it time at the bottom line. And jobless claims, a little change in that. We had new claims fell to 2,000 from 220,000 last week. So nothing earth-shattering that I'm looking at this report. But again, there's probably going to be about an estimated 500,000 federal jobs lost or cut by October of this year. That means that you'll start seeing that later on. in these unemployment numbers, but right now there's going to be a lot of unemployed federal workers. Now, what are they going to do? Some of them are going to just retire. Some are going to be, unemployment. Some of them are going to be starting a new job and seeing what it's like in the real world. Not working from home, and it could be a pretty good deal for our country. And then inflation in February was flattened out. Do we think recession's coming? It could be coming, but again, like you said, John, prices are coming down. As prices come down, eggs finally coming down, energy's coming down. People are still spending money, not as much as they were. So we'll have to see, but it's 50-50 right now.
Yeah, well, with the prices coming down, obviously the market is slowing. We know, especially here in Southwest Florida, real estate market is slowing, getting a little sluggish. With that, when does the Fed step in? Because I'm sure Donald Trump's goal is to get Powell to cut these rates. And matter of fact, Powell is going to really have to cut these rates because all the banks out there are going to have to refinance their debt, that's coming up. So, they don't want to be refinanced at 6-7%, do they?
Yeah, nothing's good with high interest rates. It's unless you're the one lending the money out, that's not a bad deal, or receiving money. But usually if you're receiving high interest rate, inflation is pretty high. So we got to get inflation down. They're looking for, it was one rate cut. Now they're looking at 2 to 3 this year, the Fed. So we got to keep an eye on that. That usually will drive the markets up, markets like lower rates. So we have to, it's really what we're doing now is what Trump's doing. He's navigating the post-stimulus economy, and that's what it was. It was a lot of money poured into the economy, but that's a temporary fix. It's not a long-term fix. It's just get the markets up and running. What I'd like to, let's talk a little bit more about the market here, John, and then we're going to bring in Kyle on this next segment. But we do have markets, after years of one way up, the market, we always talk about volatility, and we don't like volatility, but upward volatility we love, right? Well, we love upward. We just don't like the dips, and it was definitely a roller coaster ride this week. And you have to realize this, we have leaders right now. We didn't have leaders over the last 4 years. We didn't know who was running the country. We have leaders, billionaires, and people that are advising, that are business men and women, and they're going to get us out of this, and it's going to get out faster than you can imagine. So it's just these little dips in the market. You can't look at that and make fast big decisions on that. You have to make sure your advisor's talking to you. If they're not talking to you, then you need to talk to us so we can show you what we do, how we buy on the dips. And this was a good week to buy. I bought quite a few stocks this week, and it hurts to buy when the market's down. Everybody wants to buy when the market's up.
True.
But, Warren Buffett says you got to be greedy when everyone's fearful, and fearful when everyone's greedy. So, people are fearful when that markets are going down. That says, hey, people are selling, good time to buy.
Yeah, very important. And I think Trump has said it best. It's been a smoke and mirrors economy, and he wants to have a real economy. And one way that you can get positioned for what's going to take place in the days ahead, because we're going to be heading towards the golden age of America, is to position yourself with a certified financial planner professional like Alfie Townsend, who has 40 years experience in this industry. He's put together a retirement simulator process that will be a deep dive into your current portfolio to see what's really going on. He's going to take you back 5 years and put his portfolio side by side with yours. And he's going to make sure that you're allocated properly, that you're diversified correctly, that you're not taking undue risk for the amount of return that you're getting each and every year. Look, he's going to expose all the hidden fees that could be eating up your returns. And you really want to make sure that you're positioned with an income plan and a strategy that can get you to retirement, but better yet, to get you through retirement so that you don't have to go back to work. Alfie doesn't market time, track record invest, or stock pick. He's going to put together an income plan and a strategy that will stand the test of time and get you through retirement and pass a legacy on to your children and your children's children. Listen, pick up the phone, tell the operator, I want to take advantage of Alfie's retirement simulator process. Be one of the first non-callers. Don't hesitate. Don't procrastinate. Pick up the phone right now. Get your smart device. Text the word VISIT, V-I-S-I-T, to 239-747-1077. Call the operator or text the word VISIT, 239-747-1077. We're going to be right back with Kyle Lee. Don't go away. Stay tuned. We'll be right back. Welcome back to Saving the Investor with certified financial planner professional Alfie Townsend. Listen, if economic uncertainties have put your financial decisions on hold, you really need to grab a hold of Alfie's toolkit that will help transform your worries of retirement into confidence. You know, Alfie's toolkit will give you a wide range of materials, such as, will your money last as long as you do? Are you paying too much taxes in retirement? The Social Security Guide, when is the most opportune time for you to take Social Security to maximize your benefits? And will a recession rob your retirement? Listen, pick up the phone right now, call the operator, or text the word KIT, K-I-T, to 239-747-1077. Again, call the operator or text the word KIT, K-I-T, to 239-747-1077. It's time for a worry-free retirement. Get a hold of Alfie's toolkit today. That's 239-747-1077.
Thanks, John. So we are here with Kyle Lee. I'm going to tell you a little bit about Kyle. I met him some time ago. It was probably 8 years ago, I think, Kyle, and it's about that time. And I know you weren't married at the time. You're married now, and now you have a little 6-month-old, so things are changing. And you are the founder of Lee Automotive Group, and you probably heard his commercials. You've seen his commercials. It says, "Don't forget the."
You forgot it.
Yeah, I forgot it. Don't forget the dash.
Back commercials.
Back to back. Don't forget the dash. But I was thinking, there's another guy that came on was trying to copy you, and I said, man, what's that guy trying to, But if they're not copying, you're not doing anything.
That's right.
We got people copying us all the time, so that means you're doing something and they want to see it, but they're not going to copy you because you've been here for started your business in 2008. You have 2 locations, Fort Myers and Tampa, and you graduated from FGCU with a degree in business management, which is also awesome. But why don't you tell us a little bit about how many cars you have and what type of people you're looking for, and what type of vehicles do you have? Are they for the rich, the middle, the first time, kids just getting a car? I think you have a combination of all of them, but that's what's cool about your company.
Yeah, thank you so much for having me on.
Absolutely.
And it's always a pleasure. We have, we try to have cars for the masses, we say. Very clean, low mileage condo cars, the cars that your parents or people's parents or grandparents, we call them condo cars.
Okay.
They go trade them into the new car dealers and we buy them directly from them, either directly via auction. You also see our advertisements. We buy cars off the street. And we just, after we recondition those vehicles and take them through the shop, we put them out for sale. So it's our bread and butter is the $10,000 to $20,000 price range. We do have vehicles over that and some under that, but that's the nuts and bolts of it.
Okay, so you do have that, and so you are your parents. Wasn't your dad in the car business?
Yeah, he started in Lee County here in Fort Myers in 1968. So
yeah.
He sold out before I was born, and then got back in a couple times and got back out. And then after college in 2006, I graduated. The economy was in the tank, and in 2008, I decided to start with my dealer license.
Yeah, so that was 2008. That was the time we moved here in Southwest Florida. It was, we're talking about 2008, 2009. If you made it in those years, you're gonna probably have a successful business, and you do have a successful business. So tell us some of the peak season right now is probably right now in South Florida. Right?
Yeah, absolutely. The snowbirds are down in full force. It's also tax refund season. A lot of the customers use their tax return check to use for a down payment to purchase a vehicle. But snowbirds, when they come down, they're buying vehicles for their kids, they're buying vehicles for their grandkids, they're buying vehicles for themselves. A vehicle instead of renting one to keep in the garage down here in Florida. And they're also trading in their vehicles.
Yeah.
They go buy a new vehicle, they trade in the one they have a lot of times before they go back home. The reason they do that is a lot of the small towns in the Midwest, which a lot of our snowbirds are from, they might not have the selection that some of the larger dealers down here have.
Yeah, and there's a lot of time you're getting these cars at low miles in.
Absolutely. We have oftentimes average is about 12,000 miles per year put on a vehicle. Our cars have 6,000 or 7,000 miles per year.
Yeah, that's pretty awesome. The thing that I want to talk about is the tariff. So I think this is going to enhance your business big time, right? Because if they're talking about adding a 25% onto, your, like Honda's coming here in Indiana, I should say, they're bringing it over to the States to avoid that 25% tariff that President Trump is imposing. So it's going to have to take a hit on new cars, right?
Absolutely. The 25% is going to get passed on to the dealer, and then from the manufacturer, and then the dealer is going to pass it on to the consumer. So it may take a couple of weeks or a couple of months even to trickle down, but ultimately the consumer is going to pay that tariff. In turn, in the last few years since COVID, when we've seen prices on everything spike, but specifically new vehicles, that's turned a lot of buyers that typically buy a new vehicle into wanting to buy a pre-owned just to save that initial dollar investment.
And there wasn't 2 years ago, or when, the prices were, the dealers were making more money than they've ever made. What was the cause of that?
New car dealers were selling their vehicles for well over MSRP a lot of times. There were supply chain constraints, issues with getting parts and making the vehicles. They just couldn't keep up. And with factories shutting down, and it's simple supply and demand. You guys understand it better than anyone, but when the supply is down and the demand didn't necessarily increase, it just remained constant. So, and the former administration and their crazy spending, as you talked about earlier. Thank God for what happened and who's in office now, because no one wanted to see what was going to happen if 4 more years of the last bunch.
Yeah, when you don't control spending, you have a big problem, because it's good for the immediate, but you saw what happened when they passed that budget, that $1.9 trillion budget a couple years ago, and we didn't really need it. The economy was coming back, and then it just, all that money flooded in, and there was so much money in the economy that people were buying everything, and it was making it look good, but that was government money going in to buy and redistributing, and it costs inflation to go crazy. Look at some of the prices; everything was going up. And
no, that's what where are we at with the used car industry? Because I know when I bought a car years ago, I actually sold it for more than I bought it for. There was a time where used cars were really like above and beyond.
Sure.
What was happening during that time, and where are we at now in light of that? Are we still high? Because, inflation has to affect everybody's business, even the used car industry, right?
It sure does. And we still are high. We're not where we saw in COVID levels. For instance, on a 3-year lease, a vehicle coming off lease in today's market is on time par with the residual value, which is the value that the bank set when you sign your lease paperwork. Whereas 2 to 3 years ago, there was $5,000 to $10,000 in equity on almost every vehicle that was coming off lease. So we did see a little bit of a market correction, but with this 25% tariff, there's multiple manufacturers that build overseas in Canada, Mexico, and if not the whole vehicle, parts and engine components are coming from overseas. That is going to get passed on and passed down.
Yeah, and we're talking about April 2nd being a big date when he's going to put the tariffs on. I heard, maybe you can verify it or not, that a lot of these companies are bringing a multitude of cars over now to sort of like pre-rush.
They are. Absolutely. They're stocking up. I talked to a friend of mine at a Nissan store yesterday. He said they have 150-day supply.
Wow.
And pre-COVID levels, you would typically run between a 90 and 120-day supply. That means for how many cars you sell every month, you want to have about a 90 to a 4-month supply of inventory. That calls for a good selection, but they're stocking up on vehicles. They have way too many, and because of that, the manufacturers, they can't sit on the cars. They finance the cars for the dealers on a credit line. The dealer has to pay interest on it, and the manufacturer in turn has to offer rebates and discounts to move those vehicles.
So you might see the price come down on some of these cars, possibly, right?
You'll see them come down a little bit, but there's only so much they can do. And then with the price increase, once the tariffs do take place of going up 25%, they're not going to be able to discount them that much.
Yeah, very interesting. Well, one of the things that we need to talk about is taxes, because taxes are always going to be a part of our lives. And Alfie has put together a program called the Tax Map that really can position you for if taxes should rise in the future, or even if they drop in the future. Alfie has put together a plan, and this plan is to address a ticking time bomb that could be out there, because your retirement, whether you want to believe it or not, if you have an IRA or 401k, when you start taking that money out, you're going to be taxed on that money. So what you see in there isn't really what you have. Alfie has put together a plan as a certified financial planner professional. His tax map will strive to help you achieve 3 key goals. Number 1, Alfie wants to show you how to lower your tax bracket. Number 2, he wants to protect your money if taxes should rise. And number 3, Alfie can show you how to create a tax-free income. You want to be one of the first 9 callers to pick up your smart device right now. It's absolutely free. You want to have it. You want to have it in your possession to help you make decisions moving forward. All you have to do is call the operator to ask for it, or text the word TAX, T-A-X, to 239-747-1077. Don't hesitate. Call or text now to request Alfie's Tax Map. He has put together this computer program to help you navigate the tax landscape so that you can position yourself to have more money in your pocket instead of the government's pocket. Pick up your phone. The time to minimize future taxes and generate a tax-free income is right now. Call the operator, ask for it, or text the word TAX to 239-747-1077. Again, you can call or text the word TAX, 239-747-1077. We want you to stay tuned. We're going to have more with Kyle Lee right after this break, so please don't go away.
Welcome back to Saving the Investor. Again, you're listening to Alfie Townsend, Southwest Florida Certified Financial Planner Professional, here with Pastor John and Kyle Lee from Lee Automotive Group. And we are really going to be talking a little bit more to Kyle about, should we lease? Should we buy? Should you just, pay cash? Should you take the rebate? We were talking off air, and he brought up a good point about 0% interest. And, if it sounds too good to be true, a lot of times there's something attached to it. So, Kyle, let's bring you back. Again, you're listening to Saving the Investor. Jot our number down, 239-747-1077. 239-747-1077. So, Kyle, we're talking about a lot of these companies are doing 0% interest. And now interest rates are still high. So when you hear 0%, that sounds pretty darn good.
It absolutely does. And we had a young lady come in this past week, come into the dealership, and she goes, I have 0%. I got it through Ford when I bought my new Ford. And I said, well, and I kind of explained to her, she didn't know. And it's just lack of education on the consumer part in a lot of cases. But 0% sounds great, and everyone wants that. But the ones giving the 0% are the OEM manufacturers. Through Ford Motor Credit is giving 0%. Now, you have an option when you buy the vehicle, either get 0% or take, let's just say, $4,000 in rebates.
Okay.
It's always best to take the cash off the price of the vehicle and pay the interest rate. You can always refinance that loan through your local bank or your local credit union, but a lot of people get caught up on the number of what the interest rate is, and they don't take any of the cash off.
Does it depend on if you're going to keep the car? If you're going to keep the car, is 0 better, or if you're going to pay the term, would it be a lot more than the $4,000? Or
so if you look at it over the term of 72, and now lenders are stretching out payments to 84 months. So, it's just a few years ago, 60 months was the normal. Yeah. 72 was considered a long-term loan. But now every single lender, Wells Fargo, Capital One, Allied Bank, Truist Bank, they are all offering 84-month options, and that's to help with affordability and to be able to have the consumer make the payment. Now, I bought my wife, I'm a car dealer, and I went and bought her a brand new GMC Yukon. They were offering 0% or $8,500 off in rebates. I took the $8,500 off. The interest rate that I got was probably a little bit more than what I should have got.
Okay.
I paid maybe a point and a half higher, and it was through GM Financial. But that was okay. We ended up refinancing the vehicle through Suncoast Credit Union and got a rate that was 2 points lower. So
Really?
yeah, consumers can always do that, and don't be afraid to do it.
You
Doesn't
just
cost
have to run the numbers.
You just have to run the numbers and look at it. And it's really important to look at your finance charge. Your finance charge on your contract is the amount of interest you're paying over time.
Yeah.
So you can take that number and divide it by the term of your loan, and that's how much you're paying in interest every month.
Yeah. Well, those are good tips. And then the other question is, when should you lease a car and when should you buy a car?
There's a lot of factors that go into buying versus leasing. If you're like some of the women in my family, they all like to get a new vehicle every 2 to 3 years, and leasing is preferred for them. It makes sense.
So if you're not going to keep it long, you want new cars all the time.
Absolutely, you don't have to worry about the maintenance cost. You got to think of a lease as you're paying for the usage of the vehicle. You're basically just paying for the time you use it, and then you're giving it back, and you can get something else.
But the lease deals aren't what they were years ago, because I used to lease all the time too, and now it's more advantageous to buy and then flip it in a couple of years.
And part of the reason is because the manufacturers and the banks can't figure out what a car is going to be worth 3 years from now.
That's it.
So they can't come up with a residual value. So it's really hard to give an attractive lease rate and a lease opportunity.
Some of the high-end cars I'm seeing where people are leasing those now.
They are. You could write off the payment. There's some huge advantages of leasing. The government through the tax savings, which you're an expert in, the government helps you pay for the vehicle. So leasing is
so if you have a business, it's more advantageous to lease versus someone that doesn't, because you can't deduct that.
It is, and we have our own leasing company, so we can lease pre-owned vehicles, and we do. And a lot of people don't understand it. It's a different way to buy a car, but it is a good way to buy a car. If you like the vehicle, you have a predetermined value in the lease contract that you can always buy that vehicle at the end of the lease. You have a right to do so.
Yeah, and then on high-end cars too, Kyle, if if they get in an accident, it depreciates fast.
It does. It's the second you drive it off a lot on almost every car, whether it's high end or just kind of a middle of the road. The second you drive it off a new car lot, it's going to depreciate.
Yeah, but then an accident really depreciates it. All right, now that is something I really want to know, because is it if you get it fixed, if no frame damage or anything, it's more cosmetic, or you had a pretty good hit on it, and then you go and get it at a let's just say a Bentley. So if you go and get it fixed at Bentley, does that help?
It helps. It really just comes down to you, the consumer, what you want. You obviously want to drive the vehicle and make sure it's not crab walking to the side or the steering wheel's not off center. But if you get it fixed at a reputable shop, whether it's the dealer or a certified shop, they really know what they're doing, and it's usually a pretty good car.
And what percent? I'm the type of person that won't buy. With the whole thing with the Fox now, and you could see how many accidents, and if they did the oil changes, so our people tend to shy away. I'm willing to pay more for the vehicle if I know it wasn't hit. Alfie's making a good point.
Yeah, so we had a vehicle that we sold this past week. It was a 2011 Lincoln MKX. It was the first year of the SUV they came out with. It had 36,000 miles. I bought the vehicle from Germain Lincoln. It was traded into them. It was a 2011. It had 15 pages on the Carfax. This gentleman that traded in this car, he was at the Lincoln dealer every 2,000 miles getting the oil change and getting it serviced. So that car brought a premium. And with the extremely low mileage, the customer we sold it to saw that Carfax after we gave it to them, and they're like, wow, this is unbelievable. The service records were just outstanding on it. So it did add value, and it actually helped us make the deal. So
that's amazing. Now, with Trump removing the electrical mandate, where do you see electric vehicles going? Is that a big part of your business? Do you see something it's going to be in demand? I know Tesla still holds probably 40 to 50% of the market. Where is
I bought some Tesla stock.
It was down 20.
Well, I bought it because I saw President Trump. Yeah, anytime President Trump is going to promote something, and with what they're doing, his stock dropped 50% in a matter of 2 months. He doesn't need to do what he's doing.
Right.
Elon does not need to do what he's doing, and then to have the Democrats go on TV and say he is stealing the money, your money, And it's, I mean, how can they say that when all he's trying to do, he lost all this money, but he's doing it to protect our country, and he's doing it to get you a refund on money that was going out overseas. And there was something that said, how many countries who tax their American citizens and send that money overseas?
Yeah, we're the only ones that do it.
Yeah.
Yeah.
Yeah, we are. There's other countries that tax them and sending us money. Yeah. It's the exact same thing. So you do have some manufacturers out there that are probably, they're keeping their production low for the inventory low for profitability. Do you know of companies or which ones that are?
I can't. I could speculate, and they're Toyota and Lexus for one. They're having issues. Their dealers are having issues keeping inventory levels up. And I subscribe to Automotive News, and I read every week the articles that come out. And yes, there are certain manufacturers that seem to be keeping profitability across the board up for their corporate bottom lines, and they're doing so by limiting the inventory and the amount of cars that they're building. Again, it's simple economics. It's supply and demand.
Yeah.
If you decrease the supply and demand doesn't have to go up, demand just remains constant, that's in turn going to keep the pricing up. So, and there's other manufacturers like Nissan and Infiniti some articles that have come out, Infiniti's in trouble. The people aren't buying them. They've had some issues with their transmissions over the last decade, and that finally caught up with them. And they also have 120 to 150 day supply. So it's a real good time to go buy one. And not saying that they're bad cars whatsoever, but there's certain manufacturers that are really putting a limit on how many cars they're pumping out, and there's others that are just building as many as they can.
Yeah, we have a friend that owns some dealerships, and his favorite one that he owns is Toyota. He says you cannot get better than a Toyota dealership. They really take care of their stores, the owners, and they don't put one right on top of each other.
Correct.
So it's a great way to keep that supply up, and I guess the value of the car up. Kyle, this is an opportunity for you to offer something to our listeners. If there's a special deal out there you want them to give you a call on, or just give them your phone number and
absolutely
stuff.
Thank you so much again. If you want to sell your vehicle or buy a very clean low mileage vehicle, visit our website. It is www.lead-cars.com. Don't forget the dash. You could give us a call at 239-288-7374. Thank you all so much for having me on the show. I really appreciate it. It's always a pleasure.
And Kyle's a straight up guy. So, I know talking to used car salesmen, you might think of something. He is not one of those. He is, in the business he has integrity. His name is important, and he does a great job, and he will give you a good deal and a good car, so you can count on that.
Yeah, and I got an offer for you right now. Those of you that are listening, Alfie's book is in high demand all the time, and he has a complimentary copy awaiting for you. All you have to do to claim it is call the operator and ask for it, or text the word book, B-O-O-K, to 239-747-1077. Alfie's book is your guide to a fulfilling retirement. You don't want to miss out on valuable insights that he wrote, including many, many stories about investors that he has helped save over his 40-year career. All you have to do is call the operator, ask for it, pick up your phone, smart device, text the word book, B-O-O-K, to 239-747-1077. You also can visit Alfie on the web, savingtheinvestor.com. Again, his web address is savingtheinvestor.com. You'll find a wealth of information about him, his company, and all the services that he offers here through the Advantage Retirement Group. We want to thank you for joining us today. Stay tuned. We're going to be right back right after this break, so don't go away. Welcome back to Saving the Investor with certified financial planner Alfie Townsend. Alfie has been in this business for 40 years. He's a CFP, but he's also a fiduciary, which means his responsibilities to you, the individual investor, not the products or services that he offers here through the Advantage Retirement Group. You want to take advantage of his wealth of knowledge that he has over these years and let him put together an income plan and a strategy to get you to and through retirement. You can visit with Alfie in Fort Myers or Naples, 2 beautiful offices. And all you have to do is call the operator and say, I want to visit with Alfie, or text the word visit, V-I-S-I-T, to 239-747-1077. That's 239-747-1077. And Alfie, we just had a great visit with Kyle Lee from Lee Auto Group, and we were talking about tariffs And there are some key takeaways that you want to talk about, because I'm sure a lot of people, especially investors, are a little on eggshells because of the tariffs, not sure how that's going to work out. But Trump is using it as a negotiating tool to bring down taxes. So, I mean, it's got to pay big dividends down the road, doesn't it?
Well, I don't think too many people knew that these other countries were charging us, double, triple, 4 times what we were charging them.
Yeah, it's crazy.
So if we say, hey, reciprocal tariffs, that's a whole new ball game right there. That means that's more. They either have to lower theirs or we raise ours, and that's a whole new ball game for money coming into our country.
Right.
And then what happens is if they lower it, that lowers the price because it was already at 200, and if it goes down to 25% or 50%. That's a benefit for us. So I think I think maybe President Trump needs to do a little bit more explaining the tariffs and how it works and why he's doing this. And if he does that, I think people will jump on board with him. And it does disrupt the market a little bit, but what disrupts it a little bit is that he's not really, he adds a tariff and then he takes it back. Instead of being on that,
right. Yeah.
He can't be doing that.
Yeah.
But that's just short-term back and forth. But I think overall, it could be it's a negotiating tool, and it's going to, pay dividends in the long run. And the main thing we have to do is get our debt down. And if we get our debt down and don't add to the debt, that's going to be good for the market. So there's a lot of great things out there for the market to look at and say, hey, like you said earlier, John, eggs are starting to come down, gas is starting to come down. The borders are pretty much shut right now, which they should be.
Yeah.
But we were having 10,000 people a day going through them.
Yeah, it's amazing what he's done in just 60 days. And,
yeah.
And really, like you said, I think Canada puts a 230% tariff on lumber coming in. I think if he could show price, if they drop that and prices actually drop and he can show that, I think that is going to take the scare factor off the people in the market and really think it's going to rocket, don't you?
Oh, absolutely. Yeah. If they see things happen from that, then they're going to like it. And the problem with, really stimulating the economy and trade deficits is, and this is since 2008, the Federal Reserve has been printing money and the government has been handing it out, and they hand it out very, very easily. And it's causing consumption to rise faster than production. That means people are buying things up at 60% since 2007, and production is only up 10%. So that creates what we're having. That creates a deficit.
And inflation, right?
And inflation. Yep. And we were, this pushed the trade deficit from $40 billion a month to $100 billion a month. So if we don't take this, and this is the trade deficit,
survive, don't
you can't survive. And Venezuela went out of bankrupt, and countries can go out, and it's like Rome. Who would think Rome would ever fall? And the United States is a young country. It's only 250 years old, but it's not. This is not what you want to do. Is keep throwing debt there, because our kids, our grandkids, and their children are just not going to have an advantage. And I think that's why Trump is so. If people would just listen to why he's doing what he's doing and quit hating so much, and just, it's sad to see what's going on out there.
It really is. And, like you said, they're crying, they're screaming, but it's got to be done, because you got to pull the Band-Aid off and get this country back on track and get us, a balanced budget. Wouldn't that be something interesting to see, wouldn't it?
Yeah, we haven't, and that's the other thing. We haven't had a balanced budget, John, since for 23 years or something.
Yeah.
It's been a long time. So, things are changing, but, anytime change, people don't like change. Even, when clients come in here, new people come in here, and one of the things, when they have to change their advisor, because we showed them something so much better, and we showed them something that we take, in consideration your taxes, your legacy, and putting a plan together for your income plan. And then they ask, well, why didn't my advisor do that? And, I don't know why your advisor didn't do that, but we do. And that's why they move with us. But it is hard a lot of times to, when you've been with somebody we have someone that's coming over here. It's been it's a family advisor that's been their family for 30 years. Tell me that's not a hard one, but he's not showing him anything that we showed him, and didn't talk about estate planning, didn't talk about anything. And this guy needs estate planning, and that's why he's coming on board with us, because his advisor didn't talk to him, and he saw the value that we give. So it's sometimes you have to make change.
Yeah, it's very important. And you may be in a position where you've outgrown your advisor because basically your phone's not ringing, and you call them to get information, and it's pretty much the same information being passed along. Why not sit down with somebody who has 40 years experience as a certified financial planner professional? Alfie Townsend is Southwest Florida's premier financial planner, and he's a fiduciary, which means his responsibility is to you. And you want to sit down with him in Fort Myers or Naples to take advantage of his retirement simulator process. Listen, before we go off the air, you want to be one of the first 9 callers right now to pick up your phone, call the operator, or text the word VISIT to 239-747-1077. This retirement simulator process is a computer program that will take your portfolio back 5 years and show you exactly how his would have performed next to yours. He's also going to expose all the hidden fees that could be eating up your returns each and every year. Make sure that you're allocated properly, diversified correctly, that you're rebalancing, that you're not taking undue risk for the amount of return that you're getting. What if you can get more of a return and have less of a risk factor? Wouldn't that be that's worth coming in for just by itself? Pick up the phone right now, call the operator, or text the word VISIT, V-I-S-I-T, to 239-747-1077. Tell the operator, or when you land on that landing page, you're going to find out how you can meet with Alfie and take advantage of that retirement simulator process. You want to have an income plan and a strategy that will get you to and through retirement. Listen, he can only handle 9 people this week, so pick up the phone, be one of the first 9 callers right now. Pick up the phone, ask the operator for it, or text the word VISIT, 239-747-1077. You can visit with him in Fort Myers or Naples.
Thank you again, John. That was a good show, because a lot of people don't know anything about leasing. Yeah, I liked what Kyle was talking about with, take the money.
Yeah.
Most people would take the 0% interest. And again, that, we would help you decide that. If you're a client of ours, we definitely help you decide that, because it depends on how much of the rebate is and how long you're going to keep this car. If you're going to keep the car for a long time, you definitely probably do the 0%. But if you're going to flip it not too long from now, taking that money might be the thing to do. So it's options out there for everything. So we like to bring in business owners in our community. We've had Scott Fisher here. We've had just a lot of Bill Dobman from My Shower Door. He's I always say he might be running for a seat. I told him, right. Yeah. He should run for Byron seat there. There you go. But anyway, you're listening to Saving the Investor, and I don't know if you've ever or never saw our TV show. It's on NBC2 right after Meet the Press. It comes on every Sunday at 11 o'clock, 11 to 11:30. And we talk about the same topics here, but you get to see us. We put charts on there. We put graphs so you can see what we're talking about. And we're going to have some special guests. We're going to definitely have Jonas Weatherby come back on the radio show pretty soon, the estate attorney, and talk about some of the strategies that he's using for his clients. And thank you for listening on 92.5. We've been on for many, many years, well over 10 years, and Jake the Millennial produces this show, and we thank him for that. Until next week, be blessed.